the campus after a long time. Good to see all of you here and good to see all the energy in the room. We've had an exceptional year this year with an annual growth of 19.7% in constant currency terms. This was the fastest growth that we've had in 11 years. We are gaining market share, we are building on our leadership in cloud and digital, and we are working more closely with clients on their transformation programs. Growth was broad-based across business segments, service lines, and geographies. Each of our business segments grew in the double digits. US and Europe grew 20%. So very strong performance all around. Our digital revenues now account for 59.2% of our company, and they grew at 41.2% for the year. Within digital, our cloud work is growing faster, and our Cobalt cloud capabilities are seeing significant traction with our clients. Our growth has been accompanied by a robust operating margins at 23%. We delivered these margins while maintaining focus on our employees with increased compensation and benefits. Our large deal wins were at 9.5 billion for the full year and 2.3 billion for the quarter. In Q4, our revenue growth was 20.6% year on year and 1.2% quarter on quarter in constant currency terms. Our industry-leading performance in FY22 would not have been possible without the enormous contribution and commitment of all of our employees. I'm extremely proud and grateful for their extraordinary efforts in delivering all the work for our clients. We recruited 85,000 college graduates in this financial year. We added 22,000 employees in the fourth quarter. We have an extremely strong recruitment program. This is really a reflection of our enhanced recruitment capabilities, solid brand, and deep penetration into various talent markets. This increases our comfort to support our clients in their digital transformation programs as we look ahead. Our sustained momentum in FY22, large deal wins, robust deal pipeline, and client confidence in our capabilities give us comfort to provide a guidance of 13 to 15% for growth in financial year 23 in constant currency terms. Next phase, we want to further enhance our leadership along the digital innovation curve. We plan to expand our capabilities by scaling our cloud capabilities even further, expanding our digital work, expanding on our automation, increase relevance with large enterprises and the technology native companies, and strengthen our employee value proposition. Our focus on staying ahead in the cloud and digital ecosystem and the focus on employees and some of the costs which are coming back after the COVID phase is behind us, result in our operating margin guidance to be at 21 to 23% for financial year 23. With that, let me pause and open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Nilanjan Roy, Chief Financial Officer, Infosys. As always, ladies and gentlemen, we request you to ask only one question each to accommodate everyone over the next hour. And with that, I'm going to ask the first question from Reema Tendulkar from CNBC TV 18. Reema has sent her questions to us. One question for Salil and one for Nilanjan. Salil, you started FY22 with a guidance of 12 to 14% and finally ended with a 19.7% growth for FY23. This year, again, you're starting with a guidance of 13 to 15%. Is there conservatism built into it? And the macro environment is far more uncertain now. Economists are bringing down their GDP forecasts. Do you see any impact on technology budgets as your clients face a squeeze? And for Nilanjan, what led to the sharp 200 BPS margin decline in Q4? Your guidance in 21 to 23% is also lower than the 23% that you closed FY22 with. What is the reason, and what about pricing? Do you see pricing being a key in margin levers?
Thanks, Rishi. I think the first question, let me start off with that. We see the demand environment to be robust today. Yes, the macro environment, there's a lot of talk going on, but in our pipeline and in the work that we're doing in digital and cloud, we see a clear demand with our client base. Based on what we've had in terms of large deals, 9.5 billion in FY22, 2.3 billion in the fourth quarter, 40% of our large deals being net new, 48% in the fourth quarter. And what we are seeing in our pipeline going ahead gives us good confidence that this is the guidance in which we start the year at 13 to 15%. As the year progresses, we'll see what the various forces are that will play into all of this. We've also had 22,000 net additions in terms of employees, and that supports our view that we see a good, strong outlook in this current financial year 23.
Yeah, so on the margin question first, on the quarter and quarter, I think we were clear at the beginning of the year. We gave a margin guidance band of 22 to 24, and we've ended up smack in the middle at 23.0. So what we've achieved this quarter, a part of it has been planned as well. So for instance, in this quarter, for utilization, which is a big driver of margins, has come down. That was planned. We were sitting at 87.5, uncomfortably high for us, and we brought that down 88.5 to 87 actually in this quarter. So that's one planned intervention we've done. We knew that margins would get impacted. Some of it is seasonality of quarter four. That is because the working and calendar days are lower from the previous quarter. That also impacts margin. And some of it has been some headwinds on the revenue side. We've taken a specific commercial contractual for a client provision, which we expect to recover in the times ahead. But overall, I think we've added 22,000 people in this quarter as well, as Salil said. And this is looking ahead for the demand environment, and some of that cost pressure of cost tails in the quarter ahead. But like I said, we're very, very comfortable where we are for the year at 23. Looking ahead 21 to 23, we have seen what we want to do, as Salil talked about. This demand environment is very, very robust, making upfront investments behind talent, both in terms of getting freshers in early in advance, also looking at where we can invest ahead at the points which Salil talked about. So I think we've seen the success of that in 2019 when we made these investments, and the last 4 years have been a tribute to that of the market share gain as well. So that is one part of the margins, and of course the second part is travel will come back. We've seen that already, some of the facilities costs as people come back to work. Those were the tailwinds due to COVID on the margin side, and some of that will return to norm. And therefore, 21 to 23 is a comfortable band which we think we can operate in, and builds in both of these impacts as well.
Thank you. I'm going to move to the questions to our journalist friends who are present here, and then return to some of the questions we've received from broadcast media on text. So I'm going to go to the Economic Times. Sai Ishwar joins us in person. Sai, why don't you ask your question?
Hi. Hi, sir. Could you tell us, recently in a brokerage event, you said your platforms and products and platforms business is doing well. So could you give us some color on what's happening there? Also, could you give us overall percentage of what percentage of your revenue is from the platform business? And also talking about this recent influx of GCCs in India from global MNCs. So have you entered into any partnerships recently? And do you see that also aiding revenue or expanding your partnerships with global companies? Yeah, thanks.
Thanks for that question. I think on the platforms and products. So first, we have a very strong business, as you know, in Finacle. In the banking sector, it's a completely digital core banking product today, and we see continued traction in the growth that we are seeing there. We don't break that out individually, but we see good traction with that business. We are also putting together other platforms. For example, we have a platform called Equinox. This platform is focused on e-commerce, on retail companies. We had a very large deal win in Q4, which is built on the Equinox platform. And we are starting to see traction across multiple of these areas that we've put in place. We've also had a platform on insurance with McCamish, which is working well. We don't disclose the platform and product revenue breakup, but we are comfortable with how we are seeing the growth and the traction in that at this stage. And the global companies with the centers here. So we have very strong partnerships with the global companies that have centers in India, and we see a life cycle with them at the early stages. So if you look back 5-10 years, and as you look ahead, at the early stages, there's a strong interest in partnering as they're scaling up. In the middle stages, to make sure there's more efficiency, and in the later stages, to see if we can take those over and transform them. And we are working with clients in all these different stages. We are in conversations, in actual work with clients where they're building out a new capability. We are in discussions with clients where they're looking to see if that's something we can take over and transform completely, and all of that in between. Those are very important locations for the global clients. These are places from where the leadership of these centers in India are making global decisions for the companies, and we are quite fortunate that we are partnering with many of them.
Thank you. The next question is from Ayushman Barua from the Mint.
Hi, Salil. Here. Hi. Firstly, what has been the impact on business from the Russia-Ukraine war, right? That's one. And point number two is you have recently launched the Infosys Metaverse Foundry, right? So what has been the initial traction? Have you managed to win any contracts or deals with regards to this? Thank you.
So first, with respect to the situation in Europe, Infosys as a company very much would like to see that the two sides come together and come to some agreement on peace. We've also launched a fund for $1 million to help on the humanitarian areas. Given what is going on in the region, we have started to transition all of our work from our centers in Russia, from in Russia to our centers outside Russia. We have less than 100 employees in Russia. We work with no Russian clients, and the work we do is with a small number of global clients in Russia, for which, as I just mentioned, we've started the transition. So at this stage, we have no impact within our business, given what is going on from an Infosys perspective. Once again, we are very much concerned with what is going on the ground, and we are doing everything we can to help. We're also providing some assistance for reskilling of individuals that are displaced, and seeing as they move to other geographies, if they can work in some of our locations in Eastern Europe.
Are you clear that you will do business with Russian clients?
Yeah, so we don't do any business with Russian clients today, and we have no plans of doing any business going ahead.
And the other one was on the metaverse.
The metaverse has been an incredible launch. I'm glad you mentioned it. So we have created an ecosystem, a metaverse foundry, which was launched a few days ago. We are already in active discussions with several clients to start to see how they can use it. There are examples, whether on AR, VR, there are examples that we are already using. For example, the work we do in supporting ATP. There's active work in the manufacturing segment, because there's a lot of use within the metaverse of what is going on in supporting, whether it's training, whether it's security, whether it's safety procedures. So a lot of discussions. We are excited about it, and our clients are excited about it.
Thank you. The next question is from Chandra Ranganathan from Money Control.
Hey, Salil, Nilanjan. I have questions for both of you, so please bear with me. Salil, the Q4 numbers, I think Rima covered it, but it's still below what the street was estimating. So are these one-off factors? Because Q1 you typically have a strong start to the year. So are these one-off factors? Will you sort of regain momentum because you don't have the mega deals that you had that cushioned you in the a previous fiscal? I also wanted to ask you about, the whole controversy. First of all, the whole controversy around Russia. You recently closed your presence there. There are also questions about Akshata Murthy's stake in Infosys. While I know, you have nothing to do with it, are these discussions happening at the board level? Are clients asking you about it? Because North America and Europe is, where you get a majority of your business. So how serious are those concerns? Questions for Nilanjan. Attrition has zoomed to 27.7%. TCS is still at 17%. So do you see this getting worse in the coming quarters before it gets better? What are you doing to rein in attrition? And if you can give us numbers in terms of the number of freshers hired in the previous fiscal and your fresher hiring target for this fiscal, if you can, break that down for us. Thank you.
Thanks, Chandra. I think on the first one, we had very strong volume growth in Q4. As you mentioned, this is a one-off, as Nilanjan was sharing with a client, which relates to a contract situation. We fully expect that this will be reversed in the coming quarters. We see very good momentum into our business as we look ahead. Our view is, with the guidance we've given 13 to 15% growth, and the fact that we have a significant new number of recruits in Q4 22,000, we have clear understanding that we are in a good place and the growth there is working well. With respect to the discussions in the UK, we have no comments to make on any individual shareholders. Our approach on Russia, I just outlined, we are transitioning our work from Russia, and we have a real concern for what is going on the ground, and we are providing humanitarian support and help on that.
Cease operations in Russia came on the back of that controversy. That's why I'm asking you. Since she's part of the promoter family, is this a concern? Has it been taken up at the board level?
So there again, I have no comments to offer on any individual shareholder with the company. Our approach has been driven essentially by what we see the work that we are doing in that location, how we have to manage the delivery of that work, and what are the implications to our employees that are in that location. Those were mainly the factors that we looked at, and that was a discussion that we had within the management and the leadership team.
Yeah, just to add to Salil's point, I think in Q4, if you see our year-on-year, we ending the year at 20.6. The full year is 19.7. It's very important not to get fixated just on the quarter. So our exit velocity is very high. The volumes are very good for the quarter. There is some seasonality on the revenue line as well, which I talked about. But I think overall, that's giving us the guidance, I think 13 to 15. I don't recall in the last 10 years if we've given such a guidance, Salil. So I think that's something as well. Your questions were on attrition as well, and the fresher hiring. So in the last year, we've hired 85,000 freshers across both globally and in India. And the year before, I think that was the pandemic year. I don't think there was many hires, maybe a few thousands. And we are planning to do upwards of 50,000 at least. And we will see how that plays out. But that's just initial. And the good news is we have these two bright gentlemen who have mastered the art of off-campus recruitment. Earlier, the engine used to just be go to the campus, and we used to actually not have any flexibility in our volumes. I think today we have that flexibility to ramp up volumes anytime. And I think this year, I mean, we had no idea that we would be able to service a 20% demand, right, with a limited fresher set. So that's working very well. Attrition is 27.7 on a LTM basis, which is last 12 months. Actually, attrition for the quarter has come down by close to 5%, both in percentage and in absolute headcount. So we talked in last quarter, attrition had actually stabilized. And in this quarter, we are seeing both as a percentage for the quarter, Of course, the tail effect being, you're seeing it on an annual basis, will continue to climb. But the good news is we've seen some of the stability. And hopefully with the interventions we are looking ahead and with the first April comp hike planned, we should continue to see some improvement in that.
Thank you. Swati, if there's time later. The next question, later. Chandra, if we'll have to come back to you. There are a lot of people, sorry. The next question is from Reuters News, N. Sethuraman.
Sir, could you please be more specific about like what exactly was the business in Russia and like what exactly are you moving out? And you said like there's no impact on ops. So if there was no impact on ops, like what was the work earlier being done in Russia? And what is the impact of Finacle? Because like you had been working with some clients for Finacle in Russia. Alpha Bank was part of it, right? Like there was a blockchain environment that was created a couple of years back and it was tested. And what's the update on that? And you said that like there's no plan to work with like clients going forward in Russia. So which means that like so there are a lot of major banks there like under sanctions. So what would be the impact of your financial services and banks business if you are moving out of the region? And like because it's all interlinked, right? Like in Europe, could you be more specific about like, those ops that you're moving out? And could you please also help me out like what like how many resources were there in place in Russia, and like what exactly is a plan for them? Is there any sale you are considering for the Russia ops? I think it's not a subsidiary, 100% subsidiary for you.
So thanks for the question. I think the work we do is for a few of our global clients that have operations in Russia. We have less than 100 employees in Russia. Working with our clients, we are in the process, we've initiated how we can transition some of that work, all of that work outside of Russia. We have no work with any Russian client today, and we have no plans for any work with any Russian client going ahead. So we have no work with any Russian client today, and no plans for any work going ahead. Finacle, of course, works with companies, but not in Russia. So they work with banks all over the world, but that market was not a market that we were servicing in the past as well. So we have no active clients in Russia and no plans for any more clients there. There are less than 100.
I think probably less than what there's in this room.
Thank you. The next question is from Rishabh Shaw from Deccan Herald.
Hi, gentlemen. So my question is, have you gained market share from some of your bigger rivals? And so you spoke about attrition. Enough has been spoken, but are we, is the worst behind us? And the third question is, okay, so you spoke about Russia. So in Eastern Europe, what's your presence?
So on market share, we are clearly gaining market share in our view. At 19.7%, from what we understand, we are one of the fastest growing. All of this growth was based on an organic basis. And we see the tremendous traction we have with clients that gives us an increase in the market share. On attrition, as Nilanjan shared, in the quarter, the attrition was about 5 points lower than in the previous quarter. And everything we see gives us a view that attrition is coming more and more into the range that we would become comfortable with. We will see how that progresses. We are actively working on many of the initiatives that are helping on this.
Thank you. The next question is from Uma Kannan from the New Indian Express.
Congrats on a strong execution in the quarter, and it's fantastic to see you all in person here. Yeah, my question is, considering the present geopolitical risks, since you have presence in Eastern Europe, are you planning to increase local talent there? Since you were talking about skilling there, so are you planning to increase there? And my next question is on workforce. Are you facing any challenges in terms of A, retaining employees, and B, bringing them back to base locations? Thank you.
So in Eastern Europe, I mean, putting aside the geopolitical point that you mentioned, I think we have a plan of expanding in Eastern Europe. We have strong locations in multiple geographies. We are growing all of those locations. We had an approach, as you know, over the last few years for localization. And in that light, we've already expanded quite significantly, whether it's Poland or Romania. And we will continue to expand in the Eastern European geography. We have the work that is done there is really strong, and we believe that that will continue to expand. The second one was?
Challenges in terms of retaining employees and bringing back employees to base locations.
There, as we were both mentioning, our approach to attrition, our approach to employee engagement, we're making huge changes there, and we're seeing increased numbers internally on what we track with employee engagement, employee connect. What we've done as a company through the COVID period has really resonated with our employees in the flexibility that we provided and the support and the care, complete support around any medical issues, the vaccination program that we ran, among other things, for our employees. Now, in terms of the base location, our approach to return to work has been to work keeping in mind what our clients are looking for and keeping in mind what our employees are comfortable with. We are slowly moving work back onto campus. We understand that some of our employees are, of course, not in the primary location. And today, the work from home is working extremely well. So what we build as we go through the next several months and quarters will be with that flexibility. There's a tremendous advantage to the employees with the flexibility, and we will keep in mind what our clients are looking for. There are certain requirements within some clients and some industries which will require some of those teams to come back sooner. And then over time, with this massive recruitment from colleges, we also want to be aware and responsive to how we build a culture within the company going ahead and rebuild our social capital. But all of those will be done in keeping the best interests of our clients, employees, and the company in mind.
Thank you. Salil, Nilanjan, I'm going to read out some questions we've got from some of our media friends who haven't been able to join us physically. We have about 5 or 6 journalists who sent questions. The first in the order is from ET Now. And the question is, the reported numbers on top line and margins are below street expectations. Was there a delay in execution? And on TCV pipeline, should we continue expecting a range of $2 to $2.5 billion going forward? Or is there a plateauing of deal wins?
So let me start with that. I think on the full year, as we had shared earlier, and Nilanjan mentioned, we have tremendous growth at 19.7% and the margin at 23%. So very strong execution all around. For Q4, as Nilanjan shared and I shared, we had one-off instance which was related to a contractual situation. We see strong volume in Q4. We see very strong net addition to the employee base at 22,000. And we have a very strong guidance of 13 to 15% growth. So all of the factors give us a view that we see good traction in the market with our clients, and we continue on with that execution.
Thank you. The next question is from CNBC Awaz. They want to know if you're seeing signs of inflationary pressures on client budgets, and if we could throw some light on the texture of the deals for this quarter. Which sector are they from?
So on the inflationary pressure, I think what we see with clients and what we see in the environment all around, we see most industries are facing inflation in their own businesses, and they appreciate and understand that we also have wage increases and other aspects to our business that have been put in place. So yes, there are discussions we are more having today with our clients which relate to discussions on pricing. We will see as and when they convert actually into concrete steps, but certainly there are discussions on that basis. In terms of the deals, we had a good spread across all of our sectors. We had 25 large deals in Q4, spread pretty well across most of our business segments.
Thank you. The next question is from Bloomberg Quint from Sajith Mangat. He has one question for Salil and one for Nilanjan. Salil, with Infosys ending the year with nearly 20% dollar growth due to the FY21 base effect, and with the kind of order book we closed the year, what is the challenge to replicating a similar growth rate in FY23? And for Nilanjan, the margin band maintained at 22 to 24%. What is the big challenge to the margin given cost pressures? What are the levers to ensure you're at the upper end of the band?
On the growth question, I think we've really gained tremendous market share in financial year 22 by having the growth at close to 20%. We can see that in the way our interactions are working with clients. We can see that in the way we've done on various analyst ratings. We can see that in the way the perception of the company is positioned vis-a-vis digital with our clients. We've given a strong guidance of 13 to 15%, and we look forward to executing on that with our clients' support and trust, and with the work of our employees.
So on the margin, I think the guidance somebody mentioned as if it's been maintained at 22 to 24. It is actually 21 to 23 firstly. So like I mentioned earlier, as we look ahead into the year, we are very clear there's a very robust demand environment which we need to capture. And this also calls for investments to be made upfront. We've already talked about utilization, putting freshers early into the mix, hiring 22,000 freshers even before we start next year. And some of the other headwinds of the pandemic, which we enjoyed in a way as a tailwind, which was the travel, which was also facilities, etc. And some of that will come back. We, of course, have a very strong cost optimization program, which we run throughout the year. This is elements of on-site offshore mix. As you all know, it's about the pyramid. It's about automation at scale. We've put bot factories across all our delivery lines. So these are reusable resources and assets which we can deploy into many of our fixed price projects. Subcontractor costs, which were a massive headwind for us. And my friends here will going to solve it from a recruitment team this year to get us a tailwind on subcontractors. So 21 to 23 is a margin band we are comfortable with. And like I said, pricing is another element we are talking to our clients. Of course, this is a much more longer term discussion because it only happens largely when it's renewal. But we can go and start pushing for things like COLA, change requests, etc. But that's something which we really are trying to press the pedal on with our sales folks. And I don't see them. I see one gentleman, just me here. But that's a very, very important part of next year's strategy.
Thank you. We have a couple more questions on attrition and client spending. I'll just read it out. This is from Z Business. We have seen attrition levels rising across IT companies, and it has been similar for your company as well. When do you see this easing, and what's your strategy to control? And on the client part, how do you see client spending for FY23, and in which vertical do you see the highest spending coming?
So on the attrition, we've already given a view on it. What we see today is attrition having come down 5 points in the quarter. We also see, as we look ahead, many of the initiatives we put in place, whether it's greater employee engagement, the compensation reviews, different ways of people working on projects, different rates in which we go through various career progressions. All of those, some of them starting to have impact now, and some over the course of the next few quarters. we feel attrition is definitely something which we've seen a small decline from the previous quarter, and we will watch it to see how it plays out in the quarters ahead. In terms of the client spend, we see today our pipeline is actually very strong. We see in all of our discussions, clients are more and more ready to spend, much more focused on the cloud area, very much on the data analytics business, on IoT, and lots of discussion on automation, which also has impact on cost and efficiency. So in all of the elements where we have strengths, we see good traction with client discussions and client spend.
Thank you. The next question is from Shivani Shinde from Business Standard, and similar to the Russia-Ukraine conflict, what is the impact of Russia-Ukraine conflict on Europe business, and do you see any reservations or step back on spends? And for Nilanjan, two quick questions. What are the plans on getting people back to office? And in addition to Chandra's question, Shivani has asked, compared to Q3, this quarter looks soft. Can you give some more color?
So on the first point, the clients that we are working with and we are interacting with in Europe today, we don't see any impact of the situation between Ukraine and Russia directly with those clients. We will wait and watch how that plays out. But in our pipeline today, in our discussions today, we don't see any change to what they are doing with the projects they're thinking of, with the transformation they're looking at, with the cost and efficiency they're looking at.
Yes, on the return to work, we have a 3-phase plan. In fact, we've rolled it out in April itself. So the first phase is people who are in their home locations. So in the DCs where they are, and whether it's in the base DC or they're in an upcountry town which is close to a DC, we are encouraging people to come at least twice in a week, 8 days in a month into the DCs. And we're already seeing a lot of traction that senior leaders are already coming in and teams are already having huddles, etc. That's the first phase. We are also now encouraged, and as part of phase 2, encouraging people who are outside their DC towns to start making preparations over the next few months to see if they can come back into the base DC. This is again based on the individual circumstances, etc. And then over a longer period of time, we are looking at the more hybrid sort of work. Of course, that will depend on clients, it'll depend on the regulatory environment and a number of other considerations. So this will be a phased approach, and we are seeing it really each quarter. Currently working from home? From office, I think we are about 95% are remote and about probably 5% at tops are, if I'm not wrong, yeah.
Thank you. The next question is from Shilpa on similar lines. Infosys' attrition has gone up to 27.7% from 10.9% in the last 1 year. Despite all the measures put in place, it's a tight talent market. Do you see a downward spiral in the coming months? And the second question is the subcontracting expenses have gone up substantially to 16,000 crore from a little over 9,500 crore in the last 1 year. How are you revisiting the employee pyramid when there is a steady ramp up in subcontractor costs impacting margins?
On the attrition, what we see today is in Q4, our attrition is down by about 5 points from the previous quarter. We also see that many of the initiatives that we've put in place with regard to employee greater engagement, compensation, rotation of work, career progression, those are already starting to have an impact, and we anticipate they'll have an impact over the coming quarters. So we believe we have several of these initiatives in place that will help us as we go ahead. What was the second?
The second was on subcontractor costs.
You want to do that?
Yeah, I can do it. Just to add to Salil's thing on attrition, I think firstly, it's important to understand is we are in an environment where demand is chasing supply. I mean, this is an industry to be in, right? If you're in this industry where actually supply changes demand, you have 10 times worse problems. So that's, in a way, a good problem to have. And the way we have to fulfill this demand is through freshers, right? Otherwise, attrition is rotational. It is zero. It's a net zero game. My attrition is somebody else's lateral and somebody else's attrition is my lateral. So end of the day, as the freshers feed into this entire system across all companies, we've put 80,000, there are larger players, somebody who's put 100,000 plus. So once these freshers feed in, they take 3 to 4 months to come into production, etc. And that's the time you will start seeing this benefit of this coming into the overall macro environment of the hiring market as well. Now, until then, you have to make sure that you are also meeting that demand and not leaving demand on the table, right? Which is why you go for subcons. You, of course, have to pay higher for lateral compensations, etc. But like I said, this is an opportunity to grab demand. These are deals which are going 5 years, 7 years. You don't want to leave them on the table because you're not able to fulfill them for a year. And so I think over a period of 6 months, etc., definitely with freshers coming into the entire industry, and you will see a moderation of this from a more macro perspective. And subcons is one of them where we're already seeing a plateauing of our subcon costs. I think the last quarter and this quarter, and of course we have plans as part of the year, this will definitely ramp down.
Thank you. We've covered all our questions from our friends from media. Chandra, I can give you time for one more question, and I have one more question from Economic Times on text. Okay. Swati, one question, please. No, just one, Chandra, please. Either you or Swati, one question. Okay,
So
sure.
I want to ask more about the metaverse, which you said. I mean, when we spoke to Ravi last, I think couple of months back, he told about you are in conversation with a lot of clients. But how are you actually looking at it? Is it going to be a separate service unit? What is the scale of people working here, and any metrics you can share? Internally, are you looking at any metrics to measure? Because suddenly everyone is like talking about metaverse and actively looking at, in talks with clients to like take this forward.
Yeah, so the Metaverse Foundry launch was a huge success for us. What we have are a set of assets which form a part of this Metaverse Foundry. These are ways in which we can help our clients as they are considering their journey into the Metaverse. So let's say there are different segments. In the manufacturing segment, there are clients who are considering how they can use this in terms of replicating actions on a factory floor, on training, on various areas. Where you're in retail, people are looking at the metaverse concept to demonstrate various aspects of their products, to engage with the new customer who is more present in the metaverse. We have created a set of assets which can help us, help our clients to engage in that activity. And there are several discussions which are ongoing, which give us good comfort that this is starting to become important. Internally, we have some goals we've set for ourselves, which we want to drive through. And as and when we see some of those things that we can share outside, we will.
Swati, one question.
Yeah, so those are internal goals because we see some of the things that we have in place there are giving us tremendous traction. We will also have this as part of the living labs that we have in different locations all around. We will also have this when we do events with clients, we have a way to showcase some of this. And so it's starting to come into it, but there are some internal goals we've set for this.
Thank you. Salil, we have just a couple more questions. One is from the Economic Times. Surabhi says, could you talk about a bit in detail about the demand environment and client spending in the coming year, especially where, where is the demand coming from, which verticals, given the COVID situation and the geopolitical situation? And also, is the 20% growth reported this year, is it sustainable or a one-off? And what would you attribute this 20% growth to?
So on the demand environment, we see good demand across many industries, and there are different dynamics in each of the industries. So you look at high-tech businesses, they're looking to really connect with their customers in a different way, in a faster way, and we are part of that. They're trying to rework their supply chains given all of that's going on globally, and we are part of those discussions. We see good demand in financial services, which is our largest industry segment. There, we are part of areas where this is really an ops and tech transformation programs where clients are looking to have someone who can help them with the transformation of their operations while we infuse technology and create a modernized estate for them. We have good demand in the manufacturing segment, where we see clients looking at leveraging the IoT infrastructure, leveraging what is going on with the cloud and the data center evolutions. So the demand is broad-based across many of our industry segments today, and we see that looking good in terms of our pipeline as we look out to this financial year.
Thank you.
Second part was?
The second part was on the 20% growth.
Yeah. So the growth, I think we see clearly that we've got a very good traction with our clients, and we are gaining market share. And we anticipate and hope with the new phase of expansion of capabilities in cloud and cobalt, in automation, in the new digital tech companies, that we will continue to gain market share as we go ahead.
Thank you. The last question is from CNBC once more, and Rima asks, you alluded to an impact due to a client contract which you expect to get reversed. Can you quantify the hit on revenue and margins due to this?
At this stage, we won't quantify any of those specifics within that. As Nilanjan shared, and as one of the questions earlier mentioned, it's a one-off contractual impact. We see very strong volume growth in Q4, and we see 22,000 new employees joining, good demand going ahead, and a good growth outlook with our guidance at 13 to 15%.
Thank you. With that, we come to an end of this Q&A session. We thank all our friends from media who are here in person and who've sent us questions for being part of this press conference. Thank you, Salil, and thank you, Nilanjan.
Thanks.
Thank you,
Thanks,
Rishi.
Rishi. Thank you, everyone.